What if I told you that you are one of the best Forex trader in this industry? Would you believe me? I know most of you be thinking, oh, I've been getting some losses, so maybe you're, beating yourself, but that's not the case, guys. So maybe there's a couple of things that you guys probably, you need to tweak a little bit. No, I'm not saying that you should change your strategy, but there are a couple of one or two things that you guys need to tweak. But now today's video I want to talk about the Forex, the psychology part of the Forex trading. Okay, so first thing I need to talk about emotions. Okay, when I talk about emotions, I'm talking about things like fear, greed. Okay, so let's say you are in a trade and probably you think that this market might reverse on you. Let's say, of course, you are in a winning trade and you think that, oh, this market wants to reverse and take away all the profits that I just made. Probably go back and hit your stop loss. So start panicking. That's when you find yourself closing those good trades. Okay, that is just an example of fear. Or you might analyze your trades, and after some time then the market gives you the best confidence that you are waiting for, but then you begin to fear because you think, oh, what if this market reverses on me, or what if this market hits my stop loss, or what if this market doesn't go as anticipated. Now that is fear making you not take that trade. Now when I talk about greed, this is the case. You analyze your market nicely and let's say you are seeing that this market has a potential of maybe going all the way up, but then you target so many amount of pips, that is. So let's say the market has given you 50 pips, 100 pips, guys. It's not a bad thing to go home with that profit. Okay, I don't know why most people will target over 300 pips. Of course, as a swing trader you can't target 300 pips, not bad, but then you should not be greedy, guys. If you see the market has given you a good amount of pips, go home, take your money, then go home. Okay, the second thing, let's talk about discipline and patience. Okay, now let's say you have a trading plan. Okay, I'm waiting for the market to give me an inverse head and shoulder, or I'm waiting for the market to give me a double top, a double bottom, a head and shoulder. So discipline and patience is needed in this market, guys. Okay, so if the market, you see that for example, let's say I was looking for a buy opportunity, but then you see that the market comes back, and of course I was waiting for the market to touch a certain level, but then the market doesn't touch that level and decides to go all the way up. Yes, I was looking for a buy opportunity, but then does it mean that I should take that buy? No. So the discipline part of the strategy should be, this market should strictly give me what I'm waiting for, an inverse head and shoulder, because I want to take a buy, or I want to take I want to take a buy, or the market should give me a double bottom. So those are the things, let's say, that should be at the back of your mind. If this market doesn't do this, I'm not going to take this trade. If this market just shoots all the way up, I'm not going to take this trade. There's a scenario, guys. Let's say you've taken that, okay, we are talking about buys. Let's say you've taken a buy and then you are chasing that trade. You took that buy, but that was not based on your strategy, based on your trading plan, such kind of thing. But then you see that the market, the moment you take a buy, guys, the market starts reversing. So you'll be like, why is it that anytime I take a buy, the market reverses, goes down? Why is it anytime I take a sell, the market goes up? So those are the kind of questions that should always ring at the back of your mind, because I don't know why that keeps on happening, but that is Forex market. So if you are disciplined enough, of course, just wait on your setup. I say let the trade come to you. Okay, if the market touches the support that you are waiting for, well and good. Now add more confidence. Let's say, okay, I was looking for an inverse head and shoulder. If the market doesn't give me an inverse head and shoulder, I'm not going to execute. If the market doesn't give me a double bottom, I'm not going to execute. Okay, and the moment this price does as anticipated, gives me an inverse head and shoulder or a double bottom, then I don't want to add more confidence, because I don't want to get confused, guys. That is when I'm going to execute, even if there's an incoming news. Of course, that might be a problem too, but the trading plan states that these are the confidence that you are waiting for. execute your position. Okay, despite all the noise, guys, cut the noise. Of course, don't listen to anybody's opinion, just take your trades. Okay, then develop a winning mindset. Okay, so you might be in a, let's say this month has been a good run for you, making profits, of course smaller losses though. So there's a period in forex market that people do take losses. You might go all maybe through a month, 3 months, in a losing streak. But then, does it mean that you should be changing your strategy? No, stick to your strategy. Okay, now when you have your mindset, that winning mindset, it means even if the market condition changes, you are okay. If the market condition changes, that means, of course, you're taking losses. It means you should be learning more about what the market is doing. Okay, understand what the market is doing. I keep on saying you need to evolve, guys. So if the market is changing, evolve with the trend. Okay, of course you are trading a trend line, and then now the market is giving you a consolidation or sideways movement. You need to evolve, understand the market, the current market price. You need to read it, interpret it, instead of going back to revenge because you've been losing. If you keep on losing the market and you don't do your homework, of course you are prone to so many losses. I don't know which number should be, I don't know, number 3 or number 4. Risk management or risk tolerance, guys, that is something that I'm always strict on, guys. When I was starting trading, guys, let me just tell you the truth, guys. I've never blown any trading account. Even if you give me a $10 account, I've never blown that amount, because I'm always strict on my risk. Okay, so I do recommend, guys, that at least try to risk 1%. Okay, of course I know most people are trading small accounts, less than 500. So 1% of 500 is something not possible. So I recommend that when making your deposit to the forex market, at least make sure that you deposit a certain amount that you are okay. Anytime you lose it, you don't kill yourself. So let's say I've deposited $500. Maybe now that's like 1% of my account, because there's no way I'm going to risk 1% on $500. How will I okay, what's the 5% of $500? Do the math. That's crazy. How will you risk that? Okay, so maybe I have a deposit of $100, so that's like my 1%. But then onto that $100, of course, I'm not just going to risk all of it in one trade. I'm going to cut maybe 0.01, 0.02, trading that capital, just trying to protect that account. All right, seek support and education, guys. I keep on saying, guys, it took me all this while because I never had a mentor. So I never had anybody to guide me all through this forex journey. So if you think that you're stuck or you're not getting it, guys, I do advise seek professionals, seek a mentor. The journey will be way too easy compared to you struggling. I don't want you to go all through the things that I went during my trading process, guys. And I believe you guys learned something from this. So stay safe, guys, and adios amigos. Peace.